Welcome back to the channel, everyone. Today I want to talk about Citadel adding to their AMC position. I also want to go through my plan for what happens if brokers start to default. So stay tuned and let's make some money. I also wanted to give you all an update and let you know how I'm feeling. COVID's absolutely been kicking my ass the last few days, but I'm finally feeling less exhausted, enough to bring myself out of bed and make a video for you guys. And now I want to dive straight in with the key information. So, we can see that Citadel and many other institutions have just released their most recent 13F filing for Q3. We can see that Citadel have added to their position of call options by 1.1 million options, bringing their total option count of call options to 7.148 million options. Now that's valued around 272 million US dollars. But interestingly, if we have a look at the put option side, they've sold off 3.3 million put options, now only holding 5 million puts. That means not only are they now holding more call options than put options, thinking that the AMC stock is going to go up, but they've also added to their call options while selling off puts. Therefore, it seems like even Citadel don't think that AMC is going down much lower, because otherwise they'd be adding to their put position and not selling it off. Now we also have some other big ads as well. Price T Rowe Associates, which remember, Gary Gensler's brother actually works here, they just added an additional 23,000 shares. We've also got DE Shaw adding to their position with an additional 238,000 shares as well. You may remember I mentioned DE Shaw a few months ago in the video about Jeff Bezos. Another really important one, we've got Renaissance Technologies adding an additional 695,000 shares to their AMC position. Renaissance now hold 2.5 million shares of AMC, valued around $95 million. You may remember that Renaissance Technologies, or Rentech, founded by James Simons, is regarded as the most successful hedge fund in the entire world. Their signature medallion fund is famed for the best record in investing history. So if we have the most successful hedge fund in the entire world adding to their AMC position by a massive amount of shares, clearly this is positive news for AMC. Mumu's new massive promotion gives you 5 free shares worth up to $3,500 each, and also 1 share of NEO worth around $40. Now I also wanted to give you the breakdown of how you can get these 6 free shares. When you open a Mumu account, you get 1 free share up to $3,500. When you deposit any amount, you get your second free share worth up to $3,500 as well. If you deposit $100, you also get that 1 free share of NEO worth around $40. And if you deposit $2,000, then you also get the final 3 free shares, also all worth up to $3,500 each. So if you want to get 6 free shares, be sure to sign up to Mumu using the link down in the description below. Some other big ads we've got is Vanguard adding an additional 2.7 million shares, now holding 47 million. Vanguard's total AMC position is $1.796 billion, so nearly $2 billion just in AMC. And to finish off the list, we've got Group 1 Trading adding 1.7 million call options, we've got Northern Trust Corporation adding 1.5 million shares, and we've got State Street as well, adding 4.9 million shares. And interestingly, I may have just found the first few hedge funds that are going to be squeezed. Here we've got Altai Capital Management, who have a whopping 52% of their portfolio in AMC put options. Now I think it's also quite likely that Altai are also holding an AMC short position as well. Could be leveraged, might not be. But effectively, because such a large portion of their portfolio is in AMC shorts and AMC put options, AMC does not have to move too far before they are forced to cover their shorts. For example, if these put options are currently in the money and they're close to expiry, but all of a sudden go out of the money, that's half of their portfolio that could effectively just evaporate like that. On top of this, we've also got Clear Harbor with 22% and Ellington Management with 10% of their portfolios in AMC puts. Now I did actually cover this Clear Harbor one the other week because it looks like a bit of a glitch. 32,000 puts is not $1.2 billion worth of puts. But it still doesn't get around the fact that that's a very, very large portion of their portfolio held in AMC puts and most likely in AMC shorts as well. Now I also wanted to talk about this post as well. During the squeeze, if your broker defaults from both market and limit orders to only market orders, do not sell, just hold. You're about to get pennies to the dollar if you place a market order during a short squeeze. Burn this into your mind. Now obviously back in January, a lot of brokers turned off the buy button to help reduce the impacts of the squeeze. Now what this post is suggesting is that brokers may not necessarily turn off the sell button, but could restrict you from placing limit sell orders and only allow you to place market sell orders. Now what does this mean and why might it cause a problem? Well, obviously with a limit sell order, you can choose where to place your limit sell order. Let's say you place it here. Now obviously say an institution or a short hedge fund wants to buy some AMC to cover their short position, they may only place their bid order or their limit buy order somewhere around here, obviously not meeting your limit sell order. Now obviously if this hedge fund gets liquidated, they're going to be forced to meet your limit sell order and effectively take your trade and buy your AMC shares here. But obviously if your broker restricts you to placing a market sell order instead of a limit sell order, then instead of selling your AMC up here, it may just meet their buy order down here. That's obviously going to mean that you get a lot less than you wanted when selling your AMC shares. You may want $100,000 per AMC share, but if you place a market sell, you may only get $1,000 per AMC share. And that's why this poster is obviously suggesting that you do not sell your AMC using a market order. Now obviously I do agree with this, but I do also think that brokers are going to have to be very, very desperate to restrict sell orders to market sells only. Now obviously if a broker is very, very desperate in that way, it may mean they're about to go bankrupt. So what should you do? Should you hold your AMC shares in your broker and not sell using a market order, but potentially risk them going bankrupt and you might lose your AMC shares? Now obviously yes, your shares are covered by FDIC insurance up to $500,000, but that also may not help during a short squeeze as they may not give you the price that you wanted. This is why I've said multiple times in many of my previous videos is to set multiple limit sell orders ahead of time at your preferred brackets. Maybe you sell 10 or 20% on day 1 of the squeeze, another 10 or 20% on day 2 of the squeeze, another 10 or 20% on day 3, and so on. Or maybe you've got specific price targets. Maybe you sell 10 or 20% at $1,000, 10 or 20% at $2,000, 10 or 20% at $5,000, then $10,000, and so on. There's many different ways that I think that you could set those limit sell orders, but basically I just don't think it's worth trying to time the exact top and selling 100% of your shares at that very top. Because as I've said many times before, chances are you will not time the perfect top exactly. And obviously if you don't sell any on the way, then you massively expose yourself to something like this, where brokers could even restrict the selling of AMC shares. And now I also want to talk about this new article on Markets Insider. A retail trader who quadrupled her AMC holdings to $500,000 is trolling Citadel's Ken Griffin with plain banners and truck ads. Now obviously this article talks about stryker, who's been spreading awareness about the shady goings-on of Citadel. 40-year-old Catherine Larson isn't backing down on trolling Citadel Securities and Ken Griffin. She's brought plain banners and mobile track ads to spread awareness. And obviously Cat's most recent plain banner says, "We have liftoff. New York apes, keep your eyes to the skies." And it says hashtag still here Kenny and we want fairmarkets.org. I think it's brilliant that stryker is continuing to spread awareness of everything that's going on, and not only that, but she's now also managed to get an article in Markets Insider. Yes, obviously this is mainstream media, which is typically rubbish, but at least it's spreading the word further to more and more new eyes. And finally, I wanted to talk about a very interesting update to Michael Burry's Scion Asset Management. As you can see, Michael Burry has sold off pretty much all of his positions, both bullish and bearish calls. He's only left himself with 6 remaining stocks. The biggest 2 being CVS Healthcare and Lockheed Martin, but both fairly small investments with around $16 million and $10 million. He's obviously covered his large puts on ARK and Tesla, but also sold off a lot of his bullish positions like Facebook calls, CVS calls, Google stock, and many more. I think what this is basically saying is that Michael Burry is in a very indecisive moment and he doesn't really know whether the market is about to crash or continue running. And therefore Michael Burry is currently sat on the sidelines and is waiting to see how it plays out. But I think the interesting thing is that Michael Burry does see a big move either upwards or downwards, and that's why he's sat on the sidelines and isn't overly bullish or overly bearish. Guys, be sure to let me know down in the comments below what you think about Citadel adding to their position. And if you haven't already, be sure to sign up to Moomoo to get those 5 free stocks worth up to $3,500 each. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.